Okay, Assalamualaikum warahmatullahi wabarakatuh and selamat sejahtera. Okay, I would like to explain to you about MFRS 15, Revenue from Contract with Customers. Okay, this is actually the third topic of our syllabus. Okay, first of all, let's have a look at the learning objectives. Okay, at the end of this topic, you should be able to describe and understand the core principle of the new revenue recognition standard. Second, explain and apply the 5 steps of revenue recognition. Third, understand other revenue issues. Okay. And fourth, describe presentation and disclosure regarding the revenues. Okay. For your information, okay, MFRS 15 is a new standard introduced by the MASB to provide a comprehensive revenue recognition model for all contracts with customers. Okay, the standard became effective from 1st January 2018 and it replaces the previous revenue standards, okay, that is MFRS 118, MFRS 111, okay, and other related interpretations on revenue recognition, that is IFRIC 13, 15, 18, and SIC 31 on revenue. Okay, this is about the 5 steps revenue recognition model. Okay, in order to recognize a revenue from a contract with customers, okay, the seller has to apply the 5 steps of revenue recognition model. Okay, step 1 is to identify the contracts with a customer. Second, identify the performance obligation in the contract. Third, determine the transaction price. Fourth, allocate the transaction price to the performance obligations in the contract. And the last one, to recognize revenue when the entity satisfied a performance obligation. Okay, basically the 5 steps of revenue recognition model, okay, consists of recognition and measurement. Okay, step 1, 2 and 3 are related to the recognition. Okay, and step 3 and step 4 are related to the measurement. Okay, so this is about the core principle, okay, for revenue recognition. Alright, so according to the core principle of revenue recognition, okay, revenue is recognized in order to depict transfer of goods or services in an amount reflecting consideration to which the entity expects to be entitled in exchange. Okay, the core principle of MFRS 15, okay, in other words, okay, states that the revenue is recognized when the goods or services, okay, are transferred to the customer at the transaction price. Okay, and the entity expects to receive a payment consideration from the customer in exchange to those transferred goods and services. Okay, now let's move on to step 1, that is identify the contract with customers. Okay, first of all, what is the meaning of a contract? Okay, contract can be defined as an agreement between 2 or more parties that creates enforceable rights or obligations. Okay, a contract can be in written, oral, or implied from usual business practice or common practice. Okay, let's say if it has been a company's practice to provide free installation service or transportation service to its customer, okay, so this is also a form of contract, okay, between the company and its customer. Okay, now let's go to revenue guidance of MFRS 15. Okay, the revenue guidance of MFRS 15, okay, shall be applied to a contract if it meets the following criteria. Okay, basically there are 5 criteria that have to be met, okay, by a company, by a contract, in order to apply this revenue guidance. Okay, the first criteria, okay, the parties to the contract have approved the contract and are committed to perform their respective obligations. Okay, second, the company can identify each party's right regarding the goods or services to be transferred. Third, the company can identify the payment terms for the goods and services to be transferred. Fourth, the contract has commercial substance. Okay, what is the meaning of commercial substance? Okay, it means, okay, there must be an inflow and outflow of cash in the contract, and it is probable that the payment will be collected, okay, by the seller. All right, and the revenue guidance, okay, shall be disregarded, okay, if the contract is wholly unperformed and each party can unilaterally terminate the contract without compensation. Okay, so basically, all right, okay, the revenue cannot be recognized until a contract exists. That's why identifying a contract is very important, because without a contract, you cannot recognize a revenue. Okay, company obtains rights to receive consideration and assumes obligation to transfer goods or services. Okay, this is actually based on a contract. Okay, in a contract, company obtains right to receive consideration or payment from the customer, and the company also performs its obligation to transfer goods or services to its customers. Okay, the rights and performance obligation in a contract will give rise to an asset or a liability. Okay, so the rights and obligations in a contract will give rise to what we call as a contract asset and a contract liability. Okay, contract asset, okay, will arise when, okay, the company has performed its obligation, or the company has satisfied its performance obligation but has not yet received payment from its customers. Okay, so when the company has performed its obligation, okay, but has not yet received payment or consideration from its customers, okay, it will give rise to a contract asset. Okay, so the contract liability will exist when the company has received payment but not yet satisfied its performance obligation to the customers. Okay, so when the company has received payment but not yet performed its obligation to the customers, okay, a contract liability will exist. Okay. Now let's have a look at, okay, the meaning of contract asset. Okay, as I said just now, okay, a contract with a customer, can give rise to a contract asset as well as a contract liability. Okay, what is the meaning of contract asset? Okay, contract asset will arise when an entity satisfies a performance obligation by delivering the promised goods or services, but does not yet have an unconditional right to consideration. Okay. For example, other performance obligations must be satisfied before the entity can invoice the customer. Okay, I know that this sentence is a bit confusing, okay, because as you can see, okay, the underlined sentence does not yet have an unconditional right to consideration. Okay, why not we change the sentence into a positive one? Okay, we can say like this, okay, when an entity satisfies a performance obligation by delivering the promised goods or services, but it does not, but it has a conditional right to consideration or payment. Okay, we change does not yet have unconditional right to into but it has conditional right to consideration. Okay, we change it to a positive sentence. Okay, I repeat, yeah. Okay, contract asset will arise when the entity satisfies a performance obligation by delivering the promised goods or services, but it has a conditional right to consideration. But it has a conditional right to consideration. For example, other performance obligation must be satisfied before the entity can invoice the customer. Okay, So in this situation, the company must meet a certain condition, okay, in order to have the rights to receive payment from its customers. Okay, so okay, this contract asset okay usually happens when a company has more than one performance obligations. Okay, if the company only performs a part of the obligation, okay, then it must record the transaction as a contract asset. Okay, debit contract asset and credit sales revenue. Okay, not as accounts receivable. Okay, since other obligations have not been performed. Okay, so when the company has a conditional right, okay, it has a conditional right, meaning there is a condition that must be met in order to receive payment from its customer. Okay, the company must record the transaction as a contract asset, debit contract asset, and credit the sales revenue as usual. Okay, what is the condition that has to be met by a company? That is to deliver or to perform other performance obligations. Okay, if the company has not yet performed other performance obligation, meaning there's a condition that has not yet been met. Okay, therefore the company has no right to receive payment yet. Okay, so the company must record the transaction as a contract asset, and credit, debit the contract asset and credit the sales revenue. Okay, never mind. We will see the example on the contract asset later. All right. And then for account receivable, okay, we will record the account receivable, okay, when no further performance obligations are required to be satisfied. That is, the entity has unconditional right to receive consideration or payment from the customer. Okay, a right is unconditional if nothing other than the passage of time is required before payment of that consideration is due, right? Okay, so when the entity has unconditional right to receive consideration, meaning the company has no other condition or to be met, okay, in order to receive payment from the customer, then we can record it as account receivable. We have to debit account receivable and credit sales revenue. Okay, so this happens only when the company has performed its obligation, and that's it. The company has no other obligations to perform to its customer. All right, so the company can record the transaction as accounts receivable. Okay, and then for contract liability, contract liability will arise when the customer performs first. That is when the customer has made payment, to the seller, but the seller has not satisfied its performance obligation to the customer. All right, so that is when the contract liability arises. All right, so now let's have a look at example 1. All right, this is about the account receivable. Okay, so let's have a look at this example. On 1st March 2017, Orange Berhad enters into a contract to transfer a product to Simon on 31st July 2017. Okay, the contract is structured such that Simon is required to pay the full contract price of 5,000 on 31st August 2017, and the cost of the goods transferred is RM 3,000. Orange Berhad delivers the product to Simon on 31st July 2017. All right, so in this situation, the seller, Orange Berhad, signed a contract, with its customer Simon on 1st March 2017 to transfer a product on 31st July 2017. Based on the contract, the seller will deliver the product first, and that is on 31st July 2017, and the payment will be received later, that is on 31st August 2017. Alright, required, prepare the journal entry to record the contract in 2017. Okay, let's have a look at the solution here. Alright, Okay, so on 31st July 2017, okay, so this is when the goods are delivered to the customer, all right. So the seller will debit account receivable 5,000 and credit sales revenue 5,000. Okay, and then debit cost of goods sold 3,000 and credit inventory 3,000. Okay, so on 31st July, okay, the company record the transaction as account receivable, not as contract asset. Why? Okay, because the company has no other performance obligations to be performed. Okay, so once the seller, okay, has delivered the goods to its customer, and that's it. No other obligations have to be performed by the seller. All right. So that means the seller has unconditional rights to receive payment. All right. So that's why we have to debit account receivable 5,000 and credit sales revenue 5,000. Okay. Uh, and on 31st August 2017, this is when the seller receive payment from the customer. So we have to debit cash 5,000, okay, and credit account receivable 5,000. Okay, so on 31st August, we have to credit account receivable because we need to offset, okay, the 5,000, the account receivable 5,000 that we recorded on 31st July. Okay, so we offset this one by crediting account receivable 5,000 on 31st August 2017. Okay, as you can see, the revenue from the sales of goods, okay, are recognized on 31st July 2017, okay, when the goods are delivered to the customers. All right, so that's why we credit sales revenue here 5,000 on 31st July, okay, since the goods have been transferred to the customer. Okay, now let's have a look at example 2, contract asset. Okay, on 1st January 2017, Finn Berhad enters into a contract to transfer product A and product B to Jake Berhad for 100,000. Okay, in this contract, okay, the seller is supposed to deliver two types of products, okay, product A and product B to its customer Jake Berhad. Okay, the contract specifies that payment of product A, okay, will not occur until product B is also delivered. All right. In other words, payment will not occur until both product A and product B are transferred to Jake. Okay, Finn Berhad determines that standalone prices are 30,000 for product A and 70,000 for product B. Okay, standalone prices, okay, mean individual prices. Okay, individual price for product A is 30,000 and individual price for product B is 70,000. Okay, Finn delivers product A to Jake on 1st February 2017. Okay, and on 1st March 2017, okay, Finn Berhad delivers product B to Jake. Okay, so product A was delivered, okay, on 1st February 2017 and product B was delivered later, that is on 1st March 2017. Okay, required. Prepare the journal entry to record the contract in 2017. Okay, let's have a look at the answer here. Okay, so on 1st February 2017, okay, the seller, okay, will debit contract asset, okay, 30,000 and credit sales revenue 30,000. Okay, here the seller debit contract asset. Okay, why contract asset, not the account receivable? Okay, that's because the seller has conditional rights to receive payment. Okay, the seller has conditional rights to receive payment of 100,000 from its customer because it has another performance obligation to be satisfied, that is to deliver product B to the customer. That's why on 1st February, the seller will record the transaction as contract asset, debit contract asset 30,000 and credit sales revenue. Okay, since the good has been delivered, so the revenue can be recognized, okay, amounted to 30,000. Okay, as you can see here, okay, on 1st February, okay, Fin does not record an account receivable because it has a conditional right to receive RM 100,000 unless it also transfers product B to Jake. Okay, that means the seller, Fin Berhad, has other performance obligation to be satisfied, that is to transfer product A to a product B to the customer. Okay, when Fin transfers product B on 1st March 2017, it makes the following entry. Okay, so on 1st March 2017, okay, the seller will debit account receivable 100,000. Okay, why account receivables? Okay, because all performance obligations have been satisfied. Okay, all the performance obligations have been satisfied. That is to deliver product A and product B to the customer. Okay, so we have to debit account receivable 100,000 and credit contract asset 30,000. Okay, why credit contract asset? We have to offset the one that we recorded on 1st February. Okay, we have to offset. Okay, because the performance obligation has been satisfied, so we have to credit contract asset 30,000 and credit sales revenue for product B, okay, amounted to 70,000. Right? Okay, so that is how to record a contract asset. Okay, all right, and then we go to example 3. This is on contract liability. Okay, let's read the example. On 1st March 2017, Harry Berhad enters into a contract to transfer a product to Propel Berhad on 31st July 2017. Okay, it is agreed that Propel will pay the full price of RM 10,000 in advance on 1st April 2017. Alright, the contract is non-cancelable. Okay, Propel, however, does not pay until 15 April 2017 and Harry delivers the product on 31st July 2017. Okay, this is a contract signed by Harry Berhad and its customer Propel Berhad. Okay, on 1st March 2017. Okay, so in this contract, okay, Harry Berhad will receive payment in advance. Okay, that is on 1st April 2017 and the goods will be delivered to the customer on 31st July 2017. Okay, so the seller will receive the payment first and performs its obligation later. That is on 31st July 2017. Okay, required, prepare the journal entry to record the contract in 2017. Okay, let's have a look at the solution here. Okay, so on 1st April 2017, okay, this is the date when the seller is supposed to receive the payment from customer, right? Okay, so the seller will debit account receivable 10,000, okay, and credit contract liability 10,000. Okay, why the the seller debit account receivable? Because the payment has not yet been received. Okay, so it debit the account receivable 10,000 and credit contract liability 10,000. Okay, alright. On receiving the cash on 15 April 2017, okay, the seller, okay, will record the following entry. Okay, so this is when the seller received cash on 15 April 2017. So the seller will debit cash 10,000 and credit account receivable 10,000. Okay, why credit account receivable? Because the seller will have to offset, okay, the account receivable, okay, recorded on 1st April 2017. Okay, on 1st April, the account receivable was debited. Okay, now it has to offset the account receivable by crediting the account receivable 10,000. All right. Okay, and then on satisfying the performance obligation on 31st July 2017, Harry records the following entry to record the sale. All right. Okay, so on 31st July 2017, this is when the goods have been delivered by the seller to the customer. Okay, So the seller, okay, will debit the contract liability 10,000. This is to offset, okay, the contract liability recorded on 1st April, okay. Since the company has already transferred the goods to the customer, so there's no more liability. So we have to offset the contract liability by debiting it. Debit contract liability 10,000 and credit sales revenue 10,000. So this is when the seller can recognize the revenue. Okay, so it has to credit sales revenue 10,000. Okay. Alright, okay, this is another example on contract liability. Okay, this is exactly the same example as the previous one. Okay, but this time, okay, the contract is cancelable. Okay, the contract is cancelable. Okay, the same example as before. Okay, Harry Berhad, okay, enters a contract to a customer. Enters a contract to transfer a product to Propel Berhad on 31st July. Okay, the customer, Propel Berhad, will pay the full price, okay, on 1st April 2017. Okay, the contract is cancelable. However, Propel does not pay until 15 April 2017. Okay, so as the example before, okay, Propel will also pay a little bit late, that is on 15 April 2017, and Harry delivers the product on 31st July 2017. Alright, required, prepare the journal entry to record the contract in 2017. Okay, so let's have a look at the answer. Okay, here, okay, we make the first journal entries on 15 April 2017. Okay, not on 1st April 2017. Okay, because the contract is cancelable. Okay, since the contract is cancelable, okay, we only make the first journal entries on 15 April 2017. That is when payment is received from the customer. Okay, so on 15 April, okay, we have to debit cash 10,000 and credit contract liability 10,000. Why contract liability? Because performance obligation has not been satisfied or the goods have not been delivered to the customer. Alright, that's why there's a contract liability here. Okay, no journal entries are made on 1st April 2017 since Harry had not yet received payment from Propel Berhad. As the contract is cancelable, okay, there is a possibility that the customer would want to cancel the contract. Okay, on satisfying the performance obligation on 31st July 2017, Harry records the following entry to record the sale. Okay, so on 31st July, okay, it's exactly the same as the previous example. Okay, the seller will debit the contract liability 10,000. Okay, this is to offset the contract liability recorded on 15 April 2017. Okay, now there's no more liability on 31st July since the product has been delivered to the customer. Okay, there's no more liability, so we have to debit the contract liability 10,000 and sales revenue credit 10,000. Okay, so this is when the revenue is recognized by the seller. That is when the goods have been transferred to the customer. Okay, on 31st July 2017. Okay, that's all for now. Thank you very much. Okay, Assalamualaikum and salam sejahtera.